you all come in, if you've been here before, you know, but if not, make sure to ask any questions you'd like in the Q&A while we're all coming in. Oh, Solomon's joining us. Here we go.
How's it going, everybody?
And is in the general chat, feel free to chime in with where you're joining us from. It's always fun. Hey, David, it was great to see you yesterday on the thing. Nice. So it's always fun to see where everyone's coming from. And then, of course, like I always mention, go in the QA, ask any specific questions you'd like from the crew here, and then feel free, if you don't have any questions, to upvote your favorite ones. Cool. I missed anything, Adam?
No, that's the basic thing. Let's give it a couple minutes for everyone to rally in, and we'll get started.
Hello, Thousand Oaks. Thousand Oaks, yeah. That's what I'm talking about. I went to Thousand Oaks High School.
I'm curious. I know Ami's in London. Thomas, you said you were in Canada. Pei, where are you joining us from?
Boston.
Boston, okay. And Solomon?
New York.
Oh, nice. Okay.
Thomas, where are you in Vancouver?
Toronto.
Toronto. Oh yeah, I think is that where the whole crew is, the Polymath crew?
We have a decent sized crew over there, yeah.
Oh, okay.
Nice.
Cool.
We got Ohio, Washington, Dallas, Menlo Park, Oregon, North New Jersey. Nice. See, this is the best part about doing this, is that literally people from wherever join, and you get to meet such cool people.
Not appropriate, people.
Yeah, sometimes they still.
New Zealand. I'm
still waiting. You know, some weeks we get Satoshi in the chat, and some weeks we get Jay Clayton from the SEC in the chat, and some really good ones. I'm still waiting to see if he joins us today. All right, so before we jump into it, I guess if you're not speaking and on the panel, please mute the microphone. There's a little bit of feedback. But before we dive in, I'll do my new tradition, semi-new tradition now, not that new, of giving the investor disclaimer, because that's an important thing we should be doing. So everyone, this content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper, Goren, Holm, or any third-party service provider to buy or sell any securities or other financial instruments whatsoever. And that also means our first cheers of the evening. And also, Adam wanted me to mention, we have a cool partnership with Blockchain Radio. So, sorry, I just saw somebody in the chat say, "Damn, I was here for the solicitation." So we have a partnership with Blockchain Radio. So all of this will be replayed on Blockchain Radio. So go check that out. And we'll also start sharing them. And we have been sharing them on our YouTube channel. Adam, is that on the Draper, Goren, Holm YouTube channel? Or okay, perfect.
Playlist called Blockchain and Booze, where you can find a lot of the pre-recordings over there in case you missed it.
Awesome. So let's dive into the crew here and have everyone introduce themselves. See, Josh Lawler just takes it to an inappropriate place. I didn't even think of that. You're a bad person. I'm sorry. I'm just kidding. I love you, Josh. You're great. But all right, let's. I'll go in order on my thing here. Let's start with Solomon.
Yes. So thank you for having me. I'm Solomon Tesfaye. I'm the Vice President of Business Development and Capital Markets here at tZERO. For those who are not familiar with tZERO, tZERO is a leading secondary market platform for primarily private assets, digital securities.
Very cool. Kept it concise. Thomas.
Everyone, thank you for joining us. So Thomas Borrel, Chief Product Officer at Polymath. Polymath, we're a token issuance platform. We spearheaded ERC 1400, security token standard, and now we're on our way to releasing Polymesh, a purpose-built security token blockchain.
Very nice. Thank you for joining us. Pei?
Hi, everyone. Pei, Head of BizDev for Americas at Digital Asset. It's a company that created Demo, which is a smart contract language that is ledger agnostic. So previously, I was at Consensus as Director of Strategic Sales for capital markets and payments. And prior to that, I spent a couple of years at Goldman Sachs.
Very nice. Thanks for joining us. And congrats on last time I talked to you. I mean, I was on the video steering committee thing that Ami was mentioning earlier, and I saw you on there. But last time we talked, you were at Consensus. So congrats on the move. Ami.
Hi, I'm Ami Ben-David. I'm the founder and CEO of OWNERA. We are a digital securities or security tokens, as you call them here, network for institutional, for the financial institutional market. So we work with banks, asset managers, exchanges, broker dealers to bring digital securities to the institutional market. And the portfolio company of Draper. So.
Yes, so I was about to throw out there full disclosure. OWNERA, Ami's company, is a portfolio company of ours, and I'm on the board of OWNERA to keep it very, legitimate and transparent. Sometimes we forget to introduce ourselves. Adam and I are a part of Draper, Goren, and Holm. I'm one of the founders. We invest in early stage blockchain companies. We like to be the first investor in those companies, if at all possible. So if you have a company that is preparing to launch, getting ready to launch, or just an idea or concept, never too early to go to drapergorenandholm.com and submit it to us. We also do these events and many others like LA Blockchain Summit. And my background personally actually came from the crowdfunding space before the word crowdfunding existed. So I know more than I ever really wanted to know originally about things like public solicitation, the different disclosures and offerings and exemptions and things that we might be talking about in the security token space. So it's a lot of fun to dive into this stuff. Let's jump right in. I think that we have various levels and degrees of participating in this space, in this group. I think that between Ami being a part of one of the first tokenized deals, and then of course tZERO and Polymath, and Pei having been from Consensus before she was out where she is now. We have a lot of experience. I'd love to hear from, maybe Solomon first, being, your experience with tZERO and being, probably one of the most widely known security tokens out there that anybody has heard about or talked about. How do you see the difference between, the traditional route versus what you guys went? And I know there's so many hurdles and challenges. So this is like the most vague question. You could go in any direction, but just at a high level, would love to hear your experiences and how it feels so far.
Absolutely. And I guess I gave a very paraphrased introduction, but my background is primarily investment banking and venture capital. So I guess I'm somewhat, uniquely positioned to actually contrast, traditional capital markets and the direction we're all heading in. So what really attracted me to this space was the fact that when I looked at tZERO's platform, I thought they had all the right pieces to really tackle providing liquidity to private assets. So when you break down, for those who are not familiar with how our organization is structured, most people are well aware that Overstock.com is our parent company. Through Medici Ventures, they own about 80% of tZERO, but tZERO we break into two parts. One is the technology piece, which is where you can tokenize an asset. We have a proprietary approach toward tokenization, but aside from being able to digitize existing cap table or new capital raise, we also have the regulated portion of our business, which is we own 2 broker-dealers. One is SpeedRoute, which we acquired, has about 1.5% of the traditional equity markets that they route and execute. The reason why we bought that asset is rather than create liquidity organically, they have about 140, 150 broker-dealers already plugged in to that specific subsidiary. So they move about 10 billion of traditional shares. And so aside from having the connectivity to traditional Wall Street, we also have what most people are familiar with is the tZERO ATS, which is the alternative trading system. That's a secondary market platform. And that's where we have about a little over 200 issuers that are seeking to trade on that particular platform at a wide range of different portions of our pipeline. So that's where we're taking primarily private assets and enabling trading. What really attracted me to the space was the fact that about two times more capital is deployed within the private space versus the public space, but there's about 330 times more liquidity within the public space. So I just felt like there's a lot of inefficiencies, and I thought that tZERO was well positioned to tackle that. And now we've established relationships with a lot of different counterparties. It's really just going to be about interoperability to grow this ecosystem. But I thought that it was positioned in, at the liquidity side of things pretty well.
Very, very cool. But the those 200 companies you mentioned, those are not all digitized companies. They're mostly traditional in the secondaries.
So majority of the issuers in our pipeline are doing a hybrid approach. So they're tokenizing a portion of the equity and they're doing a traditional capital raise. In parallel, they understand that the ecosystem is quite young. So they want to take a dual approach. And then the reason why some of the issuers in our pipeline take a little bit longer to onboard is historically we focus on issuers that were doing a capital raise in conjunction with onboarding onto the platform. And we all know the different variables that go into a capital raise that slow it down, delay, not to mention there's a lockup after a Reg D 506C traditional private placement. But now we've also kind of put a lot of effort behind direct trading or direct listing assets that just simply have a deep cap table, a very fragmented ownership structure where we can just simply tokenize assets and onboard on the platform. So that's why there's been a slight natural delay to onboard particular assets. But over the next coming months, we should be well positioned to name off a few more to the public.
Very interesting. Very cool. So really quickly, are these assets being digitized on any particular network? Are you watching them as on Ethereum, like the original standard you were mentioning before?
So it's a mix. Our tZERO is blockchain agnostic. Currently, we've integrated Tezos and Ethereum. The majority of our pipeline is being tokenized on Ethereum, and then we have a number of large real estate assets in the pipeline, one of which we had mentioned, which is River Plaza, which is owned by Alliance Property Group. It's the largest real estate developer in Northern England. They've publicly stated that they plan on putting about 640 million of real estate on the platform. Most of that will most likely be on Tezos. So to answer your question, we're open to integrating any protocol as long as it goes through our standard tech audit. Because we really feel like this is all about interoperability. I know that some of the folks on this call, we've had a number of conversations with as well on that very topic.
Talking but muted. I think both Thomas, Polymath, and Ami OWNERA, and I would like to hear from Jay on this as well, has sort of come to the conclusion. I think a lot of people in the space have come to the conclusion that a protocol, or at least some standards that are specifically meant for securities is sort of a necessary thing. So would love, we'll get into Ethereum maybe after, but I'd love to hear from okay, like say Thomas first. What's your guys's plan on the next step? Because I know Polymesh, I talked to Trevor about it not too long ago, and would love to hear what the moving forward plan is. I think you launched your testnet recently.
Yeah, that's right. We did. So, I mean, what we were talking about a moment ago around standardization and interoperability, that was really the genesis of a lot of work that we did back in 2018. The lack of standardization was really impacting the ability for all the different market participants to really have that token flow through the entire process properly, from custody to exchanges and things like that. And so we spend quite a bit of time on ERC 1400, and a lot of learnings came out of this. But the other key benefit that it had is through the standardization, we got into more and more discussions with institutions, and institutions looking at security tokens for their efficiency, for the automation, for the transparency, some of the benefits that Solomon was mentioning a moment ago as well. And so through those discussions, the idea of the ledger itself, of the chain itself, came about, where those institutions were seeing the arrival of a standard like ERC 1400 as a step in the right direction to solve the interoperability of the different participants, and bringing more predictability around the behavior of a token when it was getting custodied or trading on an exchange. But there was still some concern over the chain itself, and that's really what led us to build Polymesh, as you indicated, a purpose-built security token blockchain to solve what we've identified as the 4 barriers to adoption, specifically governance, confidentiality, identity, and compliance. And so where we are with this, so we released our testnet in May, actually. So we had a dev preview on May 19th of this year. Then we did general availability on June 23rd. That coincided with the availability of Token Studio, which is the platform where anyone can go register their ticker, create their token, structure their token, and distribute it. So all this came about on June 23rd, and now we're still building more and more capabilities around, particularly identity, around settlement on Polymesh. And so we have several sort of upgrades that are scheduled over the coming months. We have one, a pretty significant one, in about a month or so, and then several others after that, and a goal to go into mainnet in early 2021.
Very cool. And I mean, I think that you know, when we started talking to Ami about all this stuff, it was the early days of everything. There were just a few deals on each of the sort of networks or ran by each of these sort of issuance platforms. Now we've gone through a lot of iterations. I guess, Ami, I'd like to hear from you, your feelings, and then I think, Pei, you guys work on I think, if I understand correctly, directly with some of the issuers or maybe the group. So I'd love to hear from you from that standpoint. But Ami, as building a network yourself, how do you feel it sort of differs from the Ethereum to now where things are going? I think there's almost a distribution across multiple networks, and would love to hear how you see the evolution going.
Yeah, so I went through 3 stages in the evolution. The first stage was trying to do it on Ethereum, just like Thomas, and I realized that it's not where the institutions are going to go, and I came also to the conclusion that we need a network. So we created OWNERA, and you said earlier that you like to be the first investor in a company. So I'll tell the story of I basically had the idea for OWNERA, and I called Alon to say if I can present at the conference. First call with Alon to say, can I present at the conference in LA? You know, my new vision for a network, and by the end of the call, Alon was in on the in the company already, and we basically became partners. So that's really first investor before the company is even created. So that's good. But so what we did then is we decided to create a network designed for financial institutions, and we actually built one on top of Hyperledger Fabric as the infrastructure. And we built it, and we made it, we almost reached the kind of launch phase with the first issuance and the first bank and so on. And then Corona hit, the crisis. And all the financial institutions we were talking to kind of went into their shell and disappeared for a month. But then things changed. I wrote a post where I said that Corona is not just a health crisis, it's an economic crisis more than anything else. And private companies are going to find it difficult to raise capital when all they meet is 30 to 40 investors in face-to-face meetings. That's gone. Okay, that doesn't exist anymore. And a lot of companies are going to get stuck for no fault of their own. And what can we, the financial institution, do to work together to help companies raise capital? And that post became a little bit viral in the financial institutions space, and it led to the creation of a steering group under a non-profit organization called GDF, which we lead, and it's called the Private Market Digitization Steering Group. And Pei was on the group when she was at Consensus, still coming. In the group, we already had, I think, 9 meetings already over the last 3 months. And we have about 40 participants, which includes all the major banks. I think like 7 of the top 10 major banks in the world. All the major asset managers are there. Some of the biggest exchanges in the world. Some of the biggest technology providers, IBM, R3, Consensus, as I said before, were there. And now digital assets and basically everybody that have a solution in the institutional space, and that we had kind of connection with. So this group came together, and our understanding was that in this group, different people want to deploy different blockchains. So there's no way. We originally thought we'll give them our fabric, and everybody will say thank you very much, and we'll take our fabric, and that will be it. But that's not how it works. There are going to be multiple markets there, multiple sub-markets, multiple DLTs. Some of them will be Corda, some of them will be Fabric, some of them will definitely use Polymesh, and so on. And I think in the institutional market, it will be less the public general blockchains. It will be less Ethereum, but it may be Ethereum enterprise versions like Bezo and things like that, but not the public one. But there are going to be multiple ways of them. So one of the things that this group has done is we're creating steering kind of work streams, and one of them is a technology work stream. And we basically designed an open source spec for a network that is multi-blockchain for the financial institutions, where each financial institution can connect to, and everyone can see all the assets on the network, and all the users can see all the assets, regardless of which blockchain they actually use underneath. You can think about it as a kind of like Swift, or basically a routing network, a thin routing network with no persistency. It doesn't keep any data. It just moves the information. And if you want to buy an asset that sits on a Polymesh network, and if Polymesh connects to this network, then you go to that network and get it. And if you want to get it from another network that is sitting on Corda, then you do it through the Corda network. So this network has been, we spent a lot of time kind of designing it in a way that will be very simple to implement, and as thin as possible, and in support for multi blockchains. We call it FinP2P. The reason we call it FinP2P is, those of you who know Ethereum 2, there's a protocol, peer-to-peer protocol called libP2P. So we are kind of utilizing something similar to that, and we're calling it FinP2P. And we're kind of now at the draft mode of this, and we're going to close it in the next couple of weeks, and then we're going to make it available. It's completely open sourced. Anybody can build a node of this element and connect their blockchains to it, and start providing network. And that gives the
Ami's cutting out a little bit. Hopefully he comes back in. If not, Ami, you're cutting out a little bit. Not sure if you're hearing me. All right, so oh, you're back. Yeah.
I switched to another network just to make sure. Did I speak to myself, or did you actually hear me?
We didn't hear the last 15 seconds.
Yeah, last 15 seconds.
Okay, so I was just saying that for the financial institutions, the fact that we have a multi-blockchain network is very reassuring, because they know that they can choose their providers, but still we're going to have one global institutional market where every user can see every asset. We can really reach network effect. So you can launch an asset on a bank, and then if tZERO will connect, you'll be able to trade it on tZERO and so on.
Yeah, I mean, I feel like that is almost the roadmap and the essential way in which we work most things nowadays in most technologies. I mean, I think there are various layers, and when you go onto a website, you're using 4 or 5 different programming languages without knowing you're using 4 or 5 different programming languages. And when you go on to Schwab to run your accounts, when you buy one stock, it might go through one network, and you buy another stock, it might go through another network or a different asset or a different thing. So it makes perfect sense that we create these interoperability layers. Pei, I would love to hear a little more about digital assets, but I would also love to hear your thoughts on this subject. One network versus many, but also your feelings on the public networks versus these private or purpose-built networks. Because not to say that Polymesh or OWNERA or any of these are private, but they're more purpose-built. And you're muted. Sorry.
Okay. So yeah, I mean, I think it would be helpful to kind of provide a background of my experience with tokens, not just the security tokens, but utility tokens. So when I first joined my previous company, Consensus, I was part of the utility token launch platform. So 2018 was all about spinning up a network and network effects and getting the bootstrap a network that is supported by the vision and contribution from the ecosystem. And later on, obviously, I switched over to work very closely with the asset platform. So it's an issuance platform by Consensus, and was very much shared the vision of Polymath as well as tZERO. We wanted to have the white labeling and the issuance platform provided to companies that wanted to bring real equity and equity-like products to the market. So now switching kind of to work on digital assets platform, where smart contracts and automation and programmability is more of a focus. I think, I feel like I've come around a full circle. So maybe not so much focusing on the issuance layer, but more plugged in the trading, post-trade processes and asset servicing layer, which is equally, I think, important if you look at a security token as a value chain ecosystem versus just a top layer issuance platform, right? So we're working with some of the largest market infrastructure platforms, such as Australian Stock Exchange and another APAC market infrastructure platform, in terms of providing the end-to-end solution to enable security-like products to be digitized and to be listed all the way through settlement and custody. So I think there's a lot of synergy here that we can talk about. The hope that I have is to actually, at the end of the day, being able to complete that picture and solution by working with some of the new infrastructures provided by the companies that are on this call, as well as secondary market players, right? So you can have that digitized assets and you list them, and all the way through, you need to create a secondary market to allow very easy transferability. And you have to think really through the ledger agnostic piece of it, because you're right, Thomas mentioned it, I think Solomon also mentioned at some point, that you can't be locked in the siloed and small pockets of private networks in order to fulfill that vision of being able to trade securities all around the globe. You have to have the connectivities between ledgers, and you have to be able to have that language to kind of connect all the transactions together. So that's sort of where I see the whole space right now.
Yeah, I mean, especially at these early times, right? Solomon, you guys probably represent the largest group of issuers in the space if you're looking at one single service provider. But Polymath was one of the first there, and OWNERA represents sort of opening it up and bringing it to cross ledger and all this stuff. and we're all so early, right? So I think that that's been, it's both a blessing and a curse, right? Because everyone is loving, it reminds me of the early days of the crowdfunding space where we thought, oh, the Jobs Act signed into law. It means that crowdfunding is now legal in a way. And now, let's hurry up and wait. It's going to happen one of these days. And it's a really, really slow slog. And I know a lot of you are familiar with this because a lot of the people in this industry kind of came from that world. And even now, it feels like it's moving very slowly, especially compared to some of the other things flying by us in the crypto space. But it's a very, very large network, and I think that things are happening behind the scenes to sort of digitize it. So at these early stages, though, we get to kind of shape this industry and where it might go. Do you guys see, I guess where I'm getting at and not doing a great job getting there is, do you guys see this this early stage, the double-edged sword of being early as a larger opportunity, right? Because what I'd like to kind of understand is that, I feel like there are certain companies who are really, really positioned to be the right issuers in the space. And there's a lot that are coming to us just hoping for some new liquidity and things like that. And I think we've moved past that now. And as Solomon was saying and showing and proving, there are companies now and really legitimate deals coming. I guess this will go back to Solomon. We'll go circle again. But do you see, can you use these early examples of failures or slow movements as, with even tZERO is not a failure, but an example of a slow movement compared to what we all wish things kind of went? Can you guys use that now as a good example to move the whole industry forward and bring in more issuers into the ecosystem?
Solomon, you're still muted. Try now.
You hear me now? Perfect. So in terms of it being a double-edged sword, I completely agree with you. The exciting thing is over the last little less than 2 years that I've been here at tZERO, I've definitely seen the level of sophistication of issuers significantly improve. So now we're working with companies like I mentioned with Alliance Property Group and a number of other very large issuers that actually are positioned to be serial issuers where they onboard a significant amount of assets. They're starting off with one individual asset, but then they plan to do portfolios and so forth. So it is exciting from that regard. I do think a number of the issuers, even the larger ones, are trying to determine what is the best structure. We are operating within the same regulatory landscape in terms of most of them are doing traditional private placements, so they're following the same regulatory framework from that perspective. But there are some nuances related to structuring that a lot of the issuers are trying to work through as they kind of build out this space. So I do think it's exciting, but at the same time, we understand that these first few assets that are trading on higher volumes tone for somewhat the broader industry, if you will. So we really are trying to be as conservative as possible. Not to mention we are a true subsidiary of a public company. We do operate two broker dealers, like I mentioned earlier. So that's why we tend to turn away, to be honest, about probably around 80% of the issuers that come our way, just because we are trying to be mindful of that. We're trying to have institutional grade assets on the platform or elusive assets on the platform. Not saying we're not looking for high growth assets, but we are definitely looking at the risk profile, trying to evaluate what's the most attractive for our investor base.
I mean, that's an important part of this industry, right? I mean, it's probably something you should be doing regardless of if you're being a public company. There's a lot of people coming. You got to be the gatekeepers, and it also elevates your quality along with the whole industry. Do you see any sort of best practices or lesson learned from issuers coming on board? I think in the crowdfunding space we saw real estate as a great first main use case, because it's easy to tell my mom you're buying a share of that building right there that you go to Starbucks in every week versus I joke that it's easier to sell on the internet, right? do you see any best practices or in this space so far?
Well, in terms of like your example, in terms of asset classes that tend to be the strongest, definitely real estate for the near term is going to be the strongest asset class. But I would say that I brought in it even a little bit further just to tangible assets. So whether it be industrial companies, whether it be shipping companies, whether it be private airlines, we're seeing a lot of those companies on the front end of this, just more conservative assets, if you will. We are excited now that we're focused also on direct trading or direct listing of deeper cap table companies. We do think that a lot more tech and healthcare companies that just happen to be, VC backed and have a much deeper ownership structure will also start to make up a big portion of our pipeline. But definitely from a asset class type, that's definitely our industry vertical type. That's mostly what's our pipeline is comprised of. And then in terms of best practice, I would say that if I had to give advice to any issuers, keep the structure very simple. A lot of people are trying to make a very exotic structures when they come into this space. And really, if there's no line of sight to cash flow or it's really hard to determine the intrinsic value of the instrument in general. It gets really blurry this early on, and it's already hard enough to predict what the market dynamics of any issuance is. But I think for these first issuers that are trading on our platform, we really are encouraging issuers to keep the structures very straightforward.
It makes sense. And when you talk about those deep cap table structures, are you talking about people who are just tokenizing a portion of the cap table, like you were talking about before, like one employee tokenizing their shares, or is there a little more to it?
So the deep cap tables, and I guess for the audience that may not be familiar with that term, just a lot of owners within your ownership structure. We're looking for just issuers that are looking to tokenize their whole cap table, essentially float their private market cap, if you will, on our platform. So think of, for example, a rent the runway, for example, with a significant number of investors in their cap table, which maybe in this environment, their IPO may have been significantly delayed and so forth. That's a conversation that we'd want to start with companies like that, pre-unicorn, unicorn names, but also other companies that just have a significant number of owners within their cap table, where a capital raise would slow down them onboarding. This would basically expedite them accessing liquidity.
So on that front, Pei, do you see? I guess you're if I understood correctly, you're sort of platform agnostic. Are you, or is it everyone through your platform? I mean,
yes. I mean, when you say platform agnostic, you mean ledger agnostic, or?
Yes, ledger agnostic. That's what I mean. So where I was going with that question is that I was thinking best practices from a technology standpoint would be different than best practices maybe from the standpoint of like what Solomon was saying, keeping it simple, right? Don't create a term sheet that's complicated and too hard for people to understand. So from a technology standpoint, are there best practices that you kind of pitch? If somebody comes to you and says, I want to use Ethereum, or I want to use Tezos, or I want to use Polymesh, do you try to steer them towards a particular network? Does it depend on the type of deal? I'm wondering from your standpoint what that might look like.
That's a great question. So within digital asset, we have this product called a demo on X. So the X basically could be any ledger, it could be any network. So let's say there's a Polymesh comes around, or a client of Polymesh comes around and said, hey, we like the ledger and we like the platform. We don't want to have to migrate to a different platform, but we do like your language because the language is very versatile. It's compatible with private and public ledgers, and it actually coexists and can coexist with Java and other existing more, I guess, popular languages. So then, that's how we guide clients, because if they already have their mindset on a specific ledger, there's no reason to really push them the other way. We're not a Ethereum or Fabric company, so there's really it shouldn't be our primary focus. I do think that, in terms from an asset class perspective, if there are different networks, so let's say there is a real estate platform that they use the Fabric, or they use a Corda, because it's private and it's easy to manage and all of that. That could be one small network, and then we can connect that network with another one where a cap table or venture companies are using to manage their investors and their stakeholders. So both networks can actually communicate with each other through the protocols that we call it synchronization protocol. It's just very easy. You create a domain and you connect those networks, and you create a layer of business logic so it can connect all the investors. If you cross-platform and you have a portfolio of different types of asset classes, you can still communicate and transfer. So that's kind of from a technology standpoint, we're trying to make it super flexible.
It sounds like you're almost doing a per issuer or per platform or group what Ami wants to do on the interoperability. It's going like, okay, here's your specific stack. It's Polymesh, it's this cap table management software, and it's your database, and we'll create the interoperability for that particular system. So
you start with one database. So let's say if you're actually really traditional and old school, you want to start with a SQL, that is fine too. You can build on top of SQL and use other components of blockchain technology to have that automation and programmability that you wanted from DLT. But then later, if you want to move on to Polymesh or Fabric or some other platforms, that can be done easily. So there's no lock-in on the platform to begin with.
Very cool. So Ami, there is I think Pei is showing a real world use case for maybe one issuer or one even bank or one group to do this. But what FinP2P seems to be sort of proposing is a whole layer like that, but across all of the networks, across all of the tools. I think we even used something. We even demonstrated how OWNERA can connect to Vertalo in the cap table management software at one of our events, and I think that that's where it's going to go in the long-term future, right? No single company exists right now without a tech stack or a tech product that already is there, whether it's just their own personal CRM systems or their cap table management softwares like the Vertalos, the Cartas, and things like that. But then if they're going to need to issue it and digitize the existing cap table or create a new share of stock or things like that, they're going to need to pick a network or some product that will service that for them, right? How different is today, I guess, versus where the first just a couple of years ago? Well, let me think of maybe 3 years ago. 2017, was that when you first digitized Spice VC?
It was 2017, and I think to your question about learnings, the one thing that the biggest learning that we learned is that it's all about distribution. We went with Spice when we tokenized the fund. We thought, oh great, we tokenized it, we can go to the masses and get funded, and actually the masses were not able to invest because it's a private company. Only institutional and accredited investors could invest, and they were not very much interested in, and they didn't know how to invest in a fund that is more of a long-term view and doesn't grow 10% a day and up and down. So it wasn't really a fit. So there was no distribution. And you look at it now, 2 years later, and it's not really moving. It's it's a small fund and it's tokenized, but it's not like there's a significant trade in it. When we're looking at the market today, and this is the reason why we had this group, this GDF institutional group, is that we're looking at the market, and the market is huge. The market has, as Salman said before, it's twice the size of the public markets in terms of incoming investments, about $900 billion just last year, going into this market, right? And all of it is manual. And all of it is done face-to-face and on deals where the company raising the money is only meeting 30, 40, 50 investors per round. It's really the dark ages. But we're not going to move to the new world unless we can have distribution. What is the meaning of distribution? The meaning is simple. If I speak to a company that has a valuation of $1 billion and they can raise money from VCs, but if they go to the digital securities route, they can raise money more easily, faster, better. They can have some liquidity and so on. Then they're happy. They would want to do that. But if you don't know to show them where distribution will come from, then they're not interested. So one of the reasons of putting all those financial institutions that I talked about before into the same network and connecting them is that those financial institutions together have millions of financial investors that are institutional, accredited, and so on, and are suitable. And if we can create a world where you can go on your desktop and open the list of things that you can invest in and just see all of the assets from across multiple issuance platforms, exchanges, banks, investment banks, and so on, and you can make an investment, then you really have the distribution that you need. So network effect is the element that we're looking for. In order to achieve that, we actually had to change the business model of the market to make it viable for everybody. So we built it in such a way that every transaction on the FinP2P network effectively will have two sides to it. There will be the entity that launched the asset, that brought the asset onto the network, will get some part of the transaction, and then the asset that brought the client, the investor, will get some part of the revenues, okay? So you can have a scenario where if, for example, in a scenario where some exchange connected to the network, if the exchange brought the asset and also brought the investors, then they get all of the fee. But they could actually expose an asset that another entity brought to the market, and they can get a fee for just getting the investor, but not the fee for getting the asset. Or they can have their own assets traded on an exchange in a completely different country. Let's say you bring an asset in the US and then you do a deal with an exchange in Japan, and a Japanese investor invests, and you will get the fees for exposing. So we basically made it very profitable for people to both bring assets into the network and bring investors into the network, because I think that having this scalability is what the market needs in terms of, and then it's a no-brainer. If you go to any company and say, do you want to raise money from all the institutional clients of all of these financial institutions, then of course they say yes. But if you ask them to raise money from the investors of one specific entity, then it's harder. They will ask, okay, do they actually have the investors for me? Will it work? And so on. So for me, it's all about distribution, and I'm trying to see if we can move the market, and that's why we are leading this group where we moved the market from 2 years ago when we launched our tokens, and there was zero distribution for it, and actually negative distributions, because the institutional investor did not know how to invest in a security token, to a world where it's just another line on your dashboard, and you can invest in it knowing that it came to you from a reputable bank or a reputable exchange, and a network effect where everybody sees all the assets. So this is the vision, as I see it, for the market to really grow, because the market potential is, as I said, it's twice the size of the public market, and exactly as Solomon said, we're all. I think we're quoting a Carta number that it's 330 times less liquid, and it's a true number.
That's the one.
Yeah.
So what's funny is it's distribution, but what's also interesting is this sort of trustless and more trusted world as well, because when we first met, Ami, and you started talking about the general idea or concept, because it wasn't even a company yet, it was just a concept, I got very excited, because part of the problem with distribution I tried to solve close to 10 years ago now. We launched a company called Invest, And the whole point of that company was to create, to basically a network. We use crowdfunding type technology because we're a enterprise service provider for crowdfunding. And we found a market that we wanted to go after. And it was basically, we realized that the companies that could afford us were the super giant funds, the billion-dollar funds could afford us. But the people who had $100 million fund or a $200 million fund wouldn't risk a ton of money on a technology platform yet to distribute their assets. And so what we tried to put together was a website for those funds to come and privately list their raises, you know, like a real estate fund, a VC fund, or whatever, raise money for their $100 million fund through this website, only to accredited investors behind a wall where it was all verified and all that. And we thought that we solved the distribution problem by trying to create these marketing agreements between our broker-dealer and the other broker-dealers that the bankers would had engagements with. So we called it co-marketing agreements. So that if Ami introduced an investor to the system that didn't invest in his fund, but invested in Adam's fund, they could share the fees that were already pre-negotiated. And that legally solved the distribution problem. And we thought, being a bunch of techie nerds and young people, we went, oh, every broker-dealer is now going to do a land grab to their Rolodexes to send them to our website. We actually, on the website, marketing to them, we put a term, we called it, this is like a major flashback, it said return on Rolodex. And we actually bought, I think, returnonrolodex.com. It just shows how ridiculous it was. But the idea was that in our head, every broker dealer, every banker is going to send every one of their customers to our website, because if they don't invest in one deal, a year from now they might invest in another deal and they'll collect their portion of the fees from that deal, because it would almost be like a land grab for accredited investors in the country. But what we learned very quickly is they didn't trust us. They just looked at us as a bunch of young techies. They're like, you're going to steal my Rolodex. You're not going to pay me for it, because bankers are very, very tight with their contacts for good reasons. It's their bread and butter. So when Ami originally explained this to me, and one of the reasons I got into the blockchain space was like, you don't have to trust me anymore. You can actually see every single person you brought to a system. You'd be able to actually track that they participated. You could track that they participated in a deal without seeing the details of the deal, without breaking any securities laws or privacy laws or anything like that. And I can actually know, if Solomon introduces me to Adam, that Solomon should get the fees for Adam's investments forever. And things like that were just not possible until now. And I thought it would be a singular network too, but I'm realizing that it's silly to think of a singular network, because what Polymesh is building might be perfect for private companies or for real estate, and what tZERO is doing might be perfect for already existing public companies digitizing their shares or something. I'm just making certain things up, but it makes sense. So I love where all of this is going, because I see a place for everyone in this, the niche markets to the broad markets and everything in between. Let's jump into the QA. I wanted to ask Thomas an easy one before Adam, you jump in, because I saw one that mentioned somebody wanted to know the underlying blockchain for Polymesh, if it was built from scratch or on something. Ethereum fork, whatever. Can you tell us a little bit about that, and then we'll dive into the other questions?
Sure, absolutely. So yeah, Polymesh is built on parity substrate. So we took the substrate framework for a variety of reasons, but some of the key decision criteria were around one, finality. Parity has this finality widget that gives non-probabilistic finality to blocks, which is critical for a transaction to be actually final in the financial space, to have proper finality, non-statistical, non-probabilistic finality. And it's very modular as well. And we thought that from a technology evolution perspective, regulatory evolution perspective as well, having a chain that was modular, that could be upgraded as needed was key. And the way the software is actually distributed on a parity substrate chain prevents forks from happening, which addresses a significant challenge with chains like Ethereum. When a fork occurs and you have an asset-backed token, which one's the right token? Did you get a taxable event? You know, all these questions that I'm sure the lawyers have faced at least once or twice in the last few months. So those were some of the key decision criteria. And obviously another important one as well is the ability to plug into the Polkadot system. So that's something that we're considering as a future evolution when it comes to parachains and talking to parachains. And I think just to echo some of the things that were mentioned, you know, a moment ago, our goal ultimately is to make the chain completely invisible, right? Back to what Ami was saying, what everyone has said is it's about driving the right outcome. And then the decision of a platform ends up a question of risk. What type of risk are you willing to take? Are you comfortable with the possibility of a miner that's going to bring finality to a transaction being in a sanctioned country? If you are, then you have some blockchain options. If you're not, then it narrows the field down. And that way you can pick whatever stack you want based on the risk you're willing to take, still keep your outcome in sight. And then if the chain is invisible, and if we do what we want to do, which is make that chain invisible, then you can make the switch from one chain to another completely invisible to the investors as well. Because at the end of the day, they have accounts, they have custodians that custody their assets. All they care about is how much of that asset do I hold? Which chain it's on? As an investor, do I care?
No, not really. I think that's where we're getting at, right? It's
exactly
very similar to the Ethereum argument a lot of people have been making lately in DeFi and things like that. Like, we care as a bunch of nerds in this space, and the people, you know, building care, of course, but the end consumer doesn't. You know, do you know, our friends and family care? Do we even know, you know, what technology stack you know, our Schwab account connects to, and which, you know, who they chose to do their distribution and things like that? Like, we don't.
As a nerd, you probably don't want to know, but
no.
Just to be clear.
That's true.
It would probably scare you.
That's true. Adam, did you want to jump into some Q&A?
Yeah,
we jump into networking.
I want to kind of throw up a general question, and I'm not sure if we already touched a little bit about this, but Adele asks, can governance tokens be issued as an STO?
Could I just throw out there really quickly that governance tokens, for those that know what they are, they're sort of the tokens of the day from DeFi products and from DAOs. They call them governance tokens. Essentially, they're a token that might give you rights to profits or something like that, and might give you and will give you a right to vote on where the direction of the company is heading. And it sounds a lot like, you know, common stock. So I think, you know, I think that it's just a different way of this, in my opinion. If you guys have a different opinion, would love to hear. But in my opinion, it's, you know, governance tokens are essentially the DAO's version of ownership, and you know, depending on which lawyer you asked and which organization you're looking at, would probably be considered a security. If it's a decentralized organization, then probably not. If it goes by, you know, the Ethereum model or something like that. But would love your guys' thoughts.
Yeah, I think we're all security token people here. So what I would tell you is that I've been here together with all of you in the first ICO cycle. So I'd wait a year and see whether a governance token is worth anything a year from now. And I guess just like some of the ICOs, there will be a few that will be valuable, that will actually do a proper service. You know, a good example is, as you mentioned, Brendan, before, Brave, but the BATS token, an ICO, but an actual product, an actual token that makes sense. So in the governance tokens, they will be like that as well. There will be some that will be valuable. 90% of them will, unfortunately, will not be, and may even cause all sorts of legal issues. And I think at this stage, it's more for people that are happy with the risk and happy with the kind of all of these yield farming shenanigans. So I guess for us as people that are working within the regulatory framework, it's not something that we see kind of connecting and combining, at least not in the near future. At least that's how I see it.
Hi, go ahead, Solomon. Yeah.
I was going to say, I completely agree. I guess full disclaimer, tZERO ATS only supports securities if this governance token, which I haven't seen in our pipeline thus far. But if it is structured similar to like a royalty stream, where you're getting 10% of the top line, and you have that issued as like a dividend, and it's treated as preferred equity, then we're talking about something completely different. But if it's there seem to be a lot of mites in the description, so naturally I would defer to legal on that one and look through how the offerings actually plan on being structured. But really, we have to get into the weeds on that one.
Yeah, I mean, it's a general term, and I would, I think that most, and I joked when I said the common sounds like common stock or just stock, but it really depends on the organization, depends how decentralized they are, based in the United States or not, because what we say as a security in the United States might be different in a different jurisdiction, or maybe the people doing it don't care. And technically most of us shouldn't really care that much either, as long as there's nobody being taken advantage of. But I get why it wouldn't go through a licensed bank or something like that. I think, Pei, did you have something to say before I started on? It looked like you were about to say something.
No, I think you guys covered it well. I think technically, yes, tokens that involve the ownership or rights to future cash flow, especially in the United States, is deemed most likely a security token. And I think the question more like, if you are going to issue a governance token, and have you thought through underneath the utilities of the tokens, and then probably work with your legal counsel to have a conversation with the legal body. And sometimes the CC will invite you for a private chat, and kind of going through the whole process and examining if the utility matches any nature of security tokens. And quite honestly, going through the security tokens is probably a safer route versus trying to deem that as a pure utility and non-security token. So it's just very, I think I don't have much else to add to that.
Perfect. Cool, we can go to the next question. So this one comes from Josh. Can we expect that particular digital securities will be able to trade on multiple exchange venues or even peer-to-peer? Or do you see assets restricted to a single exchange?
I will start with that, because the whole purpose of the entire effort that we're doing now with the institutional group is to make sure that an asset can trade basically on every one of the institutions that is connected, including multiple exchanges. So you can launch it on one venue, and then this venue obviously have control. They can decide who they trust and who they don't trust. But assuming they trust the other exchange, it could launch on the other exchange as well. And we've also baked it into the business model. So we definitely think that that's the future.
Once again, I agree with Ami. Right now, we don't have that scenario right now. We have about, tZERO is trading about 90% of the liquidity in the digital security space currently. So it's right now quite concentrated, but we built, similar to Ami, we built it into our model where all of our technology could be one white labeled. So we are talking to exchanges globally in terms of offering that once we hit a certain threshold of assets. And then also we look to create that interoperability and pool liquidity pools together, both domestically and as I mentioned, internationally. So that is just definitely where our view of where the industry is headed.
Yeah, I would support that as well. On the issuance side, we're seeing a lot of appetite for this. And I think that the current state of the market, number of exchanges that are available out there is sort of a limiting factor. Regulation can be a limiting factor as well in certain jurisdictions. But in terms of what the long-term vision for security tokens is and where issuers are seeing the value in tokenization is exactly that, is being able to tap into a greater investor pool across a variety of markets, where in some markets they may list through an exchange, in others they may do peer-to-peer, in others they may go through some type of an ATS or MTF. It's entirely jurisdictional at that point.
Maybe I'll add another word about this. Is a good example. We're working with an exchange that's going to come out of Israel, where they have a ton of very good companies, a lot of unicorns in the private space and so on that would be very suitable, but the local investor market is relatively small. So for them to be able to launch the assets on a local exchange, attract the local institution and so on, but have it at the same time traded all over the world is basically opening up a market into the world. So, you know, not all tech companies come from the Valley. You know, and I think that having this is going to really enable the market to grow and also remove all sorts of biases and limitations that we have in the current market.
And I think the plan here is to, you know, help those local exchanges to have that digital exchange platform, right? You'll, you know, hopefully in the future, I mean, I already see a lot of current market infrastructure platforms are creating this digital CSD or digital exchange for assets that are in token format. So I think it will be interesting to continue to observe how the existing exchanges, traditional ones, and the CSDs and CCPs to evolve in this market, how they change their roles in the process of the value chain. And perhaps, you know, if they can actually handle the safekeeping and the transfer agent functionalities and have the custody solutions in place, they could be that platform connecting a lot of different networks. So I think, you know, in terms of when the question came in as, can you trade your assets on a single exchange? I think it depends on how you define the exchange and how the future exchange is going to look like as well.
And I want to just go into the part of the question where you mentioned peer-to-peer. I think that what people think of as peer-to-peer and what it actually is very different when you look at technologies and how they could be integrated and automated. So Adam and I could be in the same room and decide that Adam is going to give me $1,000 and I'm going to give him my shares in a company. And that would be peer-to-peer. But if it's happening through a piece of technology that can enforce regulation, that can automate the KYC and AML and all those things, it would feel peer-to-peer, it would be peer-to-peer, but essentially it would have intermediaries and all these things that, because we now have technology, can be done in a way that you know, doesn't slow things down and doesn't get in the way you know, current regulation might. So I'm constantly talking to people in the DeFi space and this space and trying to bridge the gap between the two, because my heart is in DeFi, no regulation, kind of some of these things, but I do want, you know, certain things to be enforced, right? I don't want criminals to run free and do whatever they want. And so the way I kind of look at it and make it feel is that the regulated world is going to exist whether we like it or not, or we feel or not. Our job as technologists is to make it feel like that world doesn't exist. Because none of us are doing things that break the law, and let's say there needs to be only 100 investors from a certain place, or I must be an accredited investor to have access, or these things. We can create technology that enforces that regulation, that makes that regulation very, very streamlined to where we don't even feel it. And that's why I love, you know, these interoperability layers and what everyone is doing in the technology space, why digital makes so much sense, right? You know, like, I think we're all here because we're not happy with the way things currently are. You know, so I think that's what's exciting about all of these things. So I think people kind of instantly go, peer-to-peer can't be done because you must KYC. Well, KYC can be a 4-second process. Millisecond process you don't even know is happening because you're already registered somewhere. We're all registered in different places. So anyway, Adam, sorry, I just had.
No worries. I could do like a quick flash round of this last question before we break off into the networking session. So And by flash, I mean take a quick second, throw your thoughts, and I guess if everyone has something to say, we'll move on through everyone. If not, we can just break off into networking. But last question, and it was tailored more towards Solomon, but I kind of want to engage everyone. What are you seeing for regulation on the tokenization of real estate assets? Any idea when this will be open to U.S. clients?
So, well, to answer the second part of that question first, it's already in the U.S. The bulk of, I'd say, the bulk of our pipeline is real estate, and about 40% of the pipeline is in the U.S. There's a significant number of real estate assets, real estate funds that we're working with. So, from a regulation perspective, it sits within the existing framework of, traditional private placement. Most of these real estate issuers are doing private placements. Most of them are doing Reg D 506Cs that have been around for decades. They follow that same structure. They're just adding some language in their PPMs to give investors foresight around the trading dynamics on the back end. It's going well. We're seeing more and more assets daily in the United States, both on a portfolio perspective, individual asset perspective, and a wide range of different types of real estate assets, whether it be commercial, residential, infrastructure. So, it's going well on that front.
Yeah, definitely agree with Solomon here. I mean, from assets being tokenized, when we look at the evolution from 2018 to 19 to today, real estate has grown and it continues to grow. And from a U.S. perspective, it's already there. It's already happening.
Cool. Ami, Pei. If not, we can call it.
They covered it, yeah.
Cool. Okay. Sounds good, everyone. Well, thank you so much. Alon, do you want to add anything last minute before we break out?
Would love everyone just a lightning moment of telling us where to find you, the website for your company, and then excited to jump into networking with everyone.
So Ami, tell us where we can find you and remove from Pei, Solomon, and Thomas.
So you can find me on LinkedIn, Ami Ben-David, and on Twitter @Ami Ben-David. The company is OWNERA, ownera.io, and what I'm going to do is I'm going to put on the chat a link to something we call the handbook that was published by the steering group. This is a handbook that explains to financial institutions how to participate in the digital securities world. It's basically a combination of the view of the institutions, and it's very interesting to see how institutions think about the future of digital securities, what sort of network they want to see. So I think if anybody here is interested in the institutional side of digital securities, then this handbook is a very good resource.
Cool. Thank you. Pei?
So you can find me on LinkedIn, Twitter, Chen01. Digitalasset.com is the website for the company that I'm with. I guess pei.chen@digitalasset.com is my email, so feel free to reach out directly.
Great. Thank you. Solomon?
Yes, you can reach me at LinkedIn, Solomon Tesfaye, and then I will add my email into the chat. But just for radio purposes, since I know this is being recorded, it's my first name S and then my last name Tesfaye, TESFAYE @tZERO.com, and then the website is obviously tZERO.com.
Perfect. Thank you. And Thomas?
Yeah, so Thomas Borrel, BORREL. The website is polymath.network, POLY math.network. And I'm on LinkedIn as well. And my email is tbtangobravo@polymath.network.
Perfect. And I'll send an email out to everyone who attended. If they want to connect with you, they'll have all your info. Next up, we got the networking. So I'll give you the little spiel that we give out before we break off. The networking session is really fun. I encourage all the speakers to continue the conversation if it's not too late for you and if you're interested. Basically, I'm going to end the panel mode right now, and we're going to all break off into these really colorful networking tables where we'll be able to bounce between chair to chair and meet people from all over the world. It's a lot of fun. So it's really important that you have your mics on and your cameras on, or else you'll be very, very confused. Okay? So here we go. Thank you, everyone. We'll see you next time. Bye-bye.
Thank you.
Thanks, everyone.